Hey everyone, welcome back to Crypto Cash. Thank you very much for joining me here. Hope you're having a fantastic day regardless of the wonderful blood in the water here with the whales taking their profits. The killer whales today, of course, based on CPI data being, of course, well, pretty much it's really close to what was expected. I think it's just slightly higher. And it caused that knee-jerk reaction that we see. But what's interesting, though, is, of course, the traditional markets are well, they're struggling a little bit. They had a significant gap down, but they're recovering. And then the dollar index is kind of drawing dead, for lack of better terms. It spiked up, caused the price to come down for Bitcoin, and now it's kind of regulating itself out. So it does seem like Bitcoin should be able to recover from this. And my personal opinion, I'm still bullish on Bitcoin in the overall sense of getting back closer to 20,000 plus. I think that's still a very realistic probability. But right now, at this point, we got to, again, expect the worst, hope for the best, as I mentioned. Also, to preface as well, yesterday I think I misspoke. I used the word CPI data instead of PPI. I do apologize for that. This today was definitely CPI data. It's much more impactful, and yesterday was the PPI data, just a little blip on the radar compared to it. So again, we'll look at that much more in smaller time frames, but just to kind of preface and let you know, we're not in dire straits. We're getting very close to this overexhausted period, and the likelihood of further downside is fairly low, just based on previous support levels and some things I'm going to discuss with you here today. So if you're new to the channel, just know, not a financial advisor. Love teaching people to trade. You want to become a better trader? Go ahead and join. Over 200 active members right now with CryptoCash.tech. I have a trading academy, community, and signal group. Really awesome experience. Be sure to check that out. Definitely taken some healthy profits here recently. Right now, we have a few longs that are open and ready to go. Another thing to recognize as well is that we have almost 1 hour until our kickoff for our Bitget Crypto Cash basically competition that we have. It's a healthy competition amongst our community. So if you're a community member, of course, you'd have options of upwards of 10,000 USDT to qualify from. There are different bonuses based on profit and loss ratio, trading volume, and then, of course, you get some early bird rewards. But the most important thing that I've noticed, and that's kind of cool, is all you have to do is trade $3 million worth of volume, which is not very difficult because it's 3 million volume, not necessarily dollars, right? And what you do is you'd qualify, and 4 members are going to receive 1,000 USDT each. So again, I'm running these type of benefits every couple of weeks. So if you missed out today, that's okay. Go ahead and prepare for the next one. All right, you just need a minimum balance of 250 in your account. All right, so anyways, that's some cool stuff going on with the community. So just heads up on that. I'm very much excited for it, looking forward to it. We're going to go ahead and I'll make a review video later to kind of discuss those results, and we can celebrate those wins, right? So you got to celebrate the wins as much as you can due to the fact that the market can be kind of upsetting sometimes. I mean, we are literally 9 days into this continuation. Today is day number 9 of just pretty much straight red. All right, we had 2 green, really tiny green days in the meantime, but those were nothing compared to what we've seen in the past. So again, generally speaking, we should be ending the end of the downtrend or hitting our bottom, and likely going to see a recovery from here. Now, let me explain why. First of all, we've got the Fibonacci circle here, and you can see it's pretty much drawn from 69,000 up all the way down to 17,600. And if you look at here, the lowest Fibonacci retracement level is pretty much right there at 17,600. So if the price were to continue lower, we shouldn't expect much lower than 17,600 based on that sentiment. Okay, so again, that's just something to kind of think about. Fibonacci circles are very helpful. It's a very slow moving average because obviously it's taken its time to come through, but generally speaking, we can see that Bitcoin has been working its way through the regular Fibonacci retracement levels as well. So what we want to do is look at some standard stuff here. RSI, of course, on its way down, big surprise. It's kind of bouncing right off that 35 area, but the key takeaway here is that a little further down and we're going to be having an overextension. Okay, we're not quite there yet, but we're getting close. If we look at TD sequential, you can see that we're at a 7, even though we've had basically 9 straight, pretty much you could just call it 9 red days in a row. We're only at a 7 on TD sequential. So hypothetically, a couple more days left of downside or just sideways action, okay, before we get that reset. So what usually happens is we see a recovery, and then once the fourth previous candlestick counts up, we'll probably come down to an 8 and then reset. That's the likelihood there. Take a look at the MACD. Of course, we got a pretty strong divergence. That's fairly standard. It could continue, so I'd expect it to get worse before it gets better. That's the best mentality to have. But I've been enjoying some of these dips here, just setting some nice limit orders. I was able to get filled at 18.5, felt good about that. And Ethereum, I think I got filled around 12,000, or sorry, 1,200 rather, and that was a good little thing too as well. So again, Dollar cost average wherever you can, of course, whatever you can afford. But generally speaking, for right now, it doesn't feel like we're going to go tremendously lower. And let's go ahead and talk about that too. So we've looked at the daily here so far, and just to recognize the daily doesn't look fantastic, right? It doesn't take a rocket scientist to know that this doesn't look good. We're below all moving averages. We're below the relative strength index, and we are having a MACD divergence. So pretty much everything is screaming bearish divergence. The things that aren't, though, is the supporting factors of the overextension. Because if you look at the overextension, like just say, for example, we take a look at the volume weighted average price, you can see how far outside of the standard deviation lines this came if you look at the smaller time frames. I mean, that's a pretty significant candle. Of course, that's what CPI data does. It'll wick up or wick down. It came up to wick out the shorts and then came all the way down to wreck the longs. It was an interesting thing, and that happens pretty frequently. It's always a little fake out. So generally speaking, best advice is to just not have a trade open going into CPI data. Okay. Now, I have trades open myself personally, but that's, again, I'm using small amounts of leverage and small position sizing, so I can survive these type of long positions if it comes down to it, right? I'm not getting wicked out because I have cross leverage available and a lot of funds available to kind of cover those losses. Okay, so again, different mentality, different strokes for different folks. Just depends on what kind of trading style you have. Obviously, if you're a day trader, always trade at the stop loss. But regardless of that fact here, let's go ahead and talk about the reasons why we could see this turning around. So first of all, we have the overextension on the daily. Let's see if there is one on the 4 hour. We came down to a 9 recently, got a little reset, now we're down to a 4. So hypothetically, this does match up with the extra 1 or 2 more days of red. We could see another 5 more 4-hour candlesticks, 20 hours of bearish divergence. We could very well see that. Now, I like the look of this candlestick here so far, even though it had opened here and it wicked up and down in that time frame. It's a positive candle here in that sense because it does show that we could see a reversal of the upside with it being fairly doji-ish, right? And now I say fairly doji-ish because I don't think that's even a word because of the fact that it's kind of averaging itself out near the center. Usually when you see those kind of candlesticks after such a large decrease, it's a positive sign. We are extended extremely on the RSI. This is also a positive sign too. Shows us that with the price having gone all the way down the last 14 candlesticks to 20 on the RSI, the likelihood of a bounce is fairly high. Okay. Same thing with a MACD as well. This is such a significant shot down that the likelihood of the next couple of oscillators are going to be starting to dissipate. Again, these are likelihoods and probabilities. That's really what trading is. It's probability and statistics, right? So at this point here, we don't have any concrete information telling us it's going to bounce and recover. But traditionally speaking, you see RSI at 30, it'll bounce, and you oftentimes see the MACD diverging quite significantly like that. It'll typically pull back and start to average itself up. So what we want to look for here on the MACD is for this next oscillator to be higher than the previous, and that'll tell us that momentum is starting to dissipate. It pretty much looks like it's wanting to do that based on the price action being in the 18,500 range, but generally speaking, that's what we're looking for. The last thing we want to kind of identify too is the simple moving averages, and we're underneath all 3 of them. We've been there for some time. So again, this bearish divergence still continues. So get it in your head, we're still bearish on this coin, and we probably likely will be for a few more weeks. But in the general sense, I'm bullish on the short term, expecting the price action to recover and to bounce up here soon. If it wasn't for CPI data, Bitcoin would have broke 19,200 and continued on its way up. Again, you never truly know what's going to happen. Unfortunately, CPI data comes out pretty consistently, and same thing with the Fed rates as well. So we don't have a lot going for us in that sense. But in the general consensus here is that we're still trending downwards. The overall sentiment is bearish. We want to come to terms with that, but I still feel like we will see a bounce based on those overextensions. Because a lot of folks, day traders and swing traders alike, they'll base trades off of overextended behavior. And this is extremely overextended to the downside, so the likelihood of further upside is greater. I'm not saying it's just going to blast up to 20,000, but I do think that we are going to see some shorts get squeezed out here in the relative near future. That's just kind of what it feels like and what it looks like. So let's look at the hourly, of course. With the Ichimoku cloud, pretty much all green lights to leave your short position open. Now, I would recommend considering taking some profits because obviously the price does look like it wants to kind of continue higher. We just broke that 18,500 resistance, and the price is coming up to test 18,800 likely soon. So just bear in mind, if you're not taking profits, you're not doing it right. You want to take some profits and have specific targets along the way. So again, you want to try to set goals when you're trading. It's really important. I teach that to my community, and it's turning out to be a pretty pretty beneficial factor for a lot of folks. Let's take a look though at, see here, we already looked at the cloud. Let's look at the TD sequential here and see. I mean, if you take a look at this overextension as well, I mean, not only did we come way below 30 on the RSI on the hourly, which is another extreme sign, we can see here that we hit a 9 before the dump occurred. Okay, so 9, dump, and then another dump when the price action opened. So it was just, this whole thing right now is just kind of, it's very, very exhausted. So for lack of better terms, we should have stopped at the 9 and continued sideways or bounced, and instead we continued further for another 6 hours. So we are literally 6 hours into this overextension, and that is never a good sign, at least for the price action to continue lower. I think it'd be unrealistic for us to expect the price to continue to go lower right now. It might slowly bleed out, perhaps. That's an option. Yes, that's always the case. But will we come up to retest this trend line and or 18,800? I think the likelihood is there. Again, we're extremely overextended on almost every single time frame. How much longer can this continue? The likelihood of that is fairly low, especially with TD sequential being at a 7 on the daily. Bitcoin rarely hits 9s on the daily for the TD sequential. So again, just keep that in mind. And let's take a quick look too. Here's another positive factor. Again, just kind of highlighting some obvious things. We've got a 9 on TD sequential previously back in September, and then the price action went green, continued to make higher lows for quite some time after that. So again, when you see overexhaustive states, it has a tendency of turning itself around. Okay, so overexhausted at 9, continue to self up. We're at a 7 right now, another couple of candlesticks, so we'll be at a 9 and work our way back up as well. So it should be, we shouldn't see further downside based on a lot of the things we looked at here so far. All right, so again, that's kind of where we're at there in that sense. The traditional indicators, the larger time frames, the macro is screaming downside, okay? But on the same accord, it can't and shouldn't go much lower. Okay, we're overextended on all 3 time frames, and to me, an overextension on 1 time frame is something to pay attention to. When you have 2 overextensions, you absolutely want to kind of get accurate and look at all the info. And when you have 3 overextensions, in other words, every time frame is telling you that it's overextended and you're below key level resistances, then you want to make sure to kind of expect the price to recover. And here we are right now, it's retesting 18,800 as we speak. So again, pretty strong candle, of course, but once again, we'll see what happens here soon. Probably likely get a rejection at 18,800 unless we get a short squeeze to the upside. So it'd be interesting to see what happens. All right, folks, well, I hope that you learned something here today. Hopefully I didn't speak in circles and it made sense for you, of course. And if you want to become a better trader, cryptocash.tech is a website. Link in the description below. And of course, make sure you join my CryptoCash, either community and or Bitget, with my referral link so you can benefit from the bonus transfer for creating an account and obviously be eligible for this prize pool if you want to become part of that process. So take a look at that when you get a chance. I look forward to working with you either way. I thank you so much for your time. We'll see you in the next one. Take care.